So today we're going to be talking about two of the most speculated on electric car companies within the stock market. Now, of course, since the focus of this channel is around growing our accounts, we will be taking an objective look at the price action as well as the underlying fundamentals that might lead to changes in the underlying price action. And at the end of the video, we will be comparing the two apples to apples to see where they're at right now. But I should say that this isn't really much of a competition. If you know anything about the fundamentals of these two companies, you will know that it's not really a fair comparison in any way, shape, or form. But because I enjoy stomping on the dreams of the innocent, we will be comparing them anyways. But before we get into this, the only thing I ask of you in return is that you hit that beautiful and ravishing like button, and also don't forget to subscribe if you see value in the following video. Now, we've spoken a lot about Tesla on this channel. A lot. And it's usually in regards to its price action patterns that allow us to buy in when it's oversold and then sell out when it's overbought. But fundamentally speaking, there's no way that I could talk about this stock without isolating one half of my audience or the other. So let's just go ahead and isolate all of you. This is a stock with a cult-like following on both sides, where people feel like it's either worth absolutely nothing at $0 or it's worth absolutely everything and rivals the likes of Amazon and Apple. And both of these groups are of course very emotional about their opinion. And the first group is now feeling of course that they were the ones that were right, and they of course feel like it's going to keep dropping until it hits $0 because hey, it's worth nothing. And the folks on the other side, the bulls, are yelling and reminding folks that last time it took a plunge like this, it rallied 90%. Now, obviously, both members on both sides have some logical points, but the problem is when you bring too much emotion and too much bias into the market, it's almost never a good thing. It's almost never a good thing. You just make yourself one of the sheep. We know that when it comes to the stock market, everything is either really good or it's really bad. That is just this extremist sheep mentality that follows throughout the market, and is honestly why there's so many opportunities to make money. There's this idea called the efficient market hypothesis that a lot of people preach, and they say, oh, well, the market's so efficient because everybody within the market that's trading has all the same information and will have the same interpretation. Obviously, that's not the case. Everyone fights and fights and fights. It's always very emotional. But in the long run, these short-term fluctuations give way and we see the long-term value of the company. But anyways, we can use this extremist sheep mentality to use these emotional mood swings within the market to our advantage. And the analyst/monkey price targets also vary differently, just like the two major groups do. We have the upper end at around $500 and the lower end at $54. This really shows the polarization in opinions on this stock. And really, it's because Wall Street simply doesn't know how to value it. This is a storied company led by a man largely seen as either a genius pioneer or an unstable maniac, operating in an electric car niche that is facing increasingly tough competition. And when it comes to individual investors, there's a lot of anecdotal evidence that tends to point them towards one opinion or the other. If you live in one of the major cities like I do, where every other car is a Tesla, you are more likely to feel that Tesla will only get bigger, even though this is not an objective viewpoint. Likewise, if you're somewhere where you've never seen a Tesla, you're not going to have a subjective of a feeling for the company. But honestly, what the result of this is that it leads people to falling in love with stocks, or in some cases falling in love with hating stocks. That could be because of the actual car, that could be because of the man, it could be because of a bunch of different factors. They believe in the mission of the company, whatever, but it makes people cling to it emotionally, either because they love it or because they hate it. And as you can see right now, those who hate the stock, they're winning. But Tesla has always been one of these emotionally driven stocks. And this is the very reason that we've made so many videos and I've spent so much time talking about it. It has so many opportunities when it is oversold and overbought again and again. And until recently, no matter what happened, it wouldn't dip below 3-year support. So this historically gave us discounted positions and let us ride the price action back up like a magical pony. So while this stock may be beaten down, I wouldn't overlook opportunities when we start seeing early warning signs of an uptrend. I would just make sure that they are technically confirmed and not just based on your fundamental thoughts regarding Musk and his company. I know a lot of people started shorting Tesla even as late as it broke the 195 line, and this is just sort of the bubble mentality in the opposite direction. Just like everyone likes to buy in when a stock is rising exponentially, folks like to short the stock when it appears to be decreasing exponentially. And usually the late comers are the ones that end up paying for most of the bubble. But Charlie, you are so wrong. He said it himself, they are going to be running out of money within the next 10 months. Well, that's nothing we couldn't see even months ago by looking at the balance sheets ourselves. This is all public knowledge. And it's also not surprising in any way, shape, or form. Tesla is a growth company that has always operated on the edge, spending nearly everything they have to boost production and innovation. And we know Tesla has a cycle of really good news propping up the share price, and then really bad news beating down the share price. And we've seen it all with Tesla. Elon Musk saying the company will go private at $4.20 a share, saying they will go bankrupt jokingly on April Fool's Day. Elon Musk tweeting against the SEC several times, blah, 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 almost all resulting in massive fluctuations with the price action. But these things don't change the fundamentals behind the company. They do have longer term value, whether you see that as lower or farther. It's just that these events cause massive fluctuations as short-term investors freak out. And of course, it is important to note that last time Tesla got beat down this far, it did rally 90%. But as traders, it is our job to look at the price action and take an objective approach. The objective approach is that we are now at a 3-year low, and there's a lot of upside to 320-ish a share. But we are also in a long-term downtrend, and much like we don't like to buy sick dogs on the side of the road, I wouldn't recommend buying Tesla until we start seeing both early warning signs of an uptrend as well as longer-term confirmation of a reversal. So now it's time for NIO. NIO is widely seen as the Chinese Tesla competitor, and much like with Tesla, its performance resembles that of a loaf of rotting bread. Now, in terms of monkey expectations, the monkeys are ranking this at an average of $7.97, so we'll set the monkey line of support at $7.97. Now that's a bit more than double the current trading price, but as we know, monkeys will be monkeys. Now, as a reminder, the reason that we set the monkey line of support is again to get a feel of what other investors and big analyst firms are thinking. We know that the monkey line of support is always over emotional in one way or the other. It's just their opinion. There's nothing objective really to it. But since it's over emotional and we know that other investors are going to be looking at this line, that means that when taking a position, we're going to want to be aware of that so we understand that, hey, if we're trading above it on a stock that we think is going to go up, we're going to have a lot more risk because most people think it's going to go down, and that impacts individual investors as well. But technically speaking, we are at an all-time low with nothing but upward potential if we do start seeing signs of a reversal. This stock has the spikeability factor where it's prone to massive runs and then run downs, which is perfect and quite beautiful for us as traders. This run up earlier in the year was largely caused by a monkey proclaimed increase in demand as well as heightened media coverage on the company. Unlike Tesla, NIO doesn't have the same amount of investor name recognition, and thus an increase in name recognition alone can create volatility in a stock, and in this case resulted in a rally and subsequent drop. And NIO has this pattern of running down quickly and then bouncing and then running down and then bouncing. And if history repeats itself, we could be due for another bounce quite soon, as we just saw several periods of selling and are now oversold once again. And this is also something that the folks over at Investor Place picked up on as well. Nonetheless, diving into the fundamentals, NIO is an electric car company in the increasingly isolationist and government-sponsored electric car market of China. There's tons of competition for NIO just within China alone, but the luxury electric car segment within China remains pretty unsaturated. Ironically, their biggest competitor on mainland China is Tesla. But with EV sales growing in China, which already accounts for 1/3 of global passenger vehicle sales globally, it's reasonable to assume that NIO has a lot of fundamental expansion potential if the company executes correctly. So there's that. But how does NIO stack up when compared to Tesla in the moment? How are they doing right now? Well, I get a lot of comments and messages asking me this question, and a lot of people think that it's like comparing apples to apples when that's not really the case. Both of these companies are on different chapters within their growth potential. But let's start by comparing them in terms of sales. So Tesla has sold a total of 532,000 units since 2012. NIO, on the other hand, has sold about 15,000 since its start 5 years ago, most of which are still in the process of being delivered. And in terms of countries that they sell in, Tesla has an estimated 15 main international markets that they're selling in, with China actually being the second most popular behind only the United States. NIO has headquarters in both China and the US, but currently only sells in China. But obviously these two companies are operating in completely different markets, and NIO isn't as far along in its development, so again, it's not really like comparing apples to apples. NIO is also government sponsored, but hey, what Chinese business isn't government sponsored? And in a way, the US did back Tesla by allowing a tax credit for those who purchased the car. Still, keep in mind, when you hear someone say that NIO is comparable to Tesla in terms of strictly fundamentals, you should make sure to remind them of these numbers. But anyways, both of these electric car companies will be facing more and more competition from larger and more established car companies that increasingly add electric cars to their lineups. Every day there seems to be a new car company that comes out with an electric car. Anyways, let us know which car company you prefer in the comment section below. But in any case, I hope this video was useful for you. If you have any questions, feel free to comment below or reach out to us on the ZipTrader Circle Facebook group. We also have a trading tutorials playlist if you're having a hard time figuring out how to approach the market, how to turn a consistent profit, and just general risk management. Anyways, have a great day, folks, and I'll see you in the next video.